Hey everybody, how we doing? Wow, today is Tuesday. It's September 13th. Massive sell-off today on Wall Street. All indexes deep in the red. We're going to talk about how ridiculous it is. What they're saying is the reason for the sell-off. Now, we told you this was a dead cat bounce, the rally that we saw in the past month and a half in the markets today. Dow Jones down almost 4%. That was a decline of over 12.7. Nasdaq down over 5%. Russell 2000 almost 4%. S&P 500 4.3%. So carnage across the board. The reason that they are saying that Wall Street sold off is because the shock inflation number, right? So inflation now picking back up over the past month. They put this number out every 30 days, the CPI, and it was worse than expected, right? Worse than expected. So maybe things will get better for a month or two. Maybe you'll see a drop here and there, but overall inflation is going up. Now we are seeing some relief. Just our last report, we talked about how used car prices, wholesale prices, were starting to come down. Now, for the most part, dealers haven't adjusted their prices down as much, but that's just one example of the deflation that we're seeing. Used car prices, we're going to start seeing those come down. Home prices, we're going to start seeing those come down more. Other cities are already seeing home prices come down. But inflation overall, the cost of food, energy, still up there. We saw a little bit of a relief in fuel and energy, but other forms of energy, natural gas, diesel, not much relief at all. And this is what I said. This looks to me like it was an attempt to get Main Street investors into the market. And remember how it was said that there was this nice recovery going on and that the stock market was going to go back up to new all-time highs because the job numbers, the unemployment number was low, all that. Here we have this massive carnage. So I hope not many people here on this channel got caught up in that mania, or what was put out there to be, a new bull market. A new bull market when people are in record levels of debt. We have bankruptcies picking up. We have foreclosures picking up. We have car loans that are 30, 60, 90 days past late increasing. This is just the beginning of a financial economic collapse. Some people even say Armageddon. There's people out there talking about Great Depression 2.0, and we're talking about investors and economists that have been in the game for a long time. Not any of them that you'll see on TV, of course. They're not allowed to tell you that on TV because that would spook the markets even more. It would spook Main Street investors. And remember, the big Wall Street investors, the investment houses, they want to take the Main Street dollars. They want to take your money and my money. And that's why everything looks so rosy until everything falls apart. Maybe that's why in the previous two downturns that we didn't get much warning out of the 6 o'clock news people on the national news television, right? We got warnings from people in the alternative media, people like Peter Schiff and others, but not too many people on Maine got it completely wrong, but yet they still have their job as of today. All the Fed people that said inflation was temporary, that inflation was transitory, they still have their job. All the people that were completely 100% wrong, they still have their jobs, right? So you almost have to scratch your head and ask yourself, with nobody losing their job when they get it that wrong, it's their job to know what's going to happen with the economy, and they get it wrong again and again. The Fed saying that there was not going to be permanent inflation. Now they're trying to fight inflation with these rate hikes, and it's not looking good. So hopefully nobody got suckered into this, what I said was a bear market, a bear trap, or a dead cat bounce, a bounce in a bear market, or a bull run in a bear market. A lot of different names people put on it. More today, we had oil down again, 87.50 a barrel. Now, something tells me that after the end of November, that we're going to start seeing oil go back up, if you know what I mean. I think you know why they may be suppressing the price right now. There's a lot of people that have something to gain by keeping a low oil price right now. Gold took a hit, silver took a hit. Wow. These are times to buy it, in my opinion, times to buy silver. I'm not backing up the truck, but I am buying much more heavily than I usually buy with these under $20 silver prices. Silver, and I'll say it again because people are always asking, is going to be the next phase of the monetary system. It may still be a while. The Fed has some tightening to do still. They still have some more carnage to cause. And at the end of this, I think there's going to be a new round of QE, lowering rates. And it's not just me saying that. Economist and author Nomi Prinz is out there. She was in an interview on CNBC, she says the Fed is going to reverse course and the Fed is going to pivot in 3 stages. If you want to search that article, I'll put a shot up here on the screen. And I agree with what she says. But the question is, how much carnage is going to be done to the markets before the Fed actually pivots, right? So again, hopefully nobody got burned on this. We knew the inflation numbers were going to pick back up here. The Fed's not doing enough to fight it. And in fact, the Fed really can't do anything about it. What are they going to do? Raise interest rates? And is that going to manufacture more cars? No. Is that going to pump more fuel or give us a bigger supply of energy? No, raising rates does not do that. It tamps down on some of the investment and some of the people taking out loans to make purchases, but it doesn't give us any more supply. We have a demand and supply problem, and it's not going to be fixed by raising rates. It's insane. It's insane how people are surprised at this. A surprise CPI number. What do you guys think about that? I think every one of us here on this channel knew what was going to be happening with CPI and inflation. And if they told us the real number, most of us know it's closer to 18-20% and even higher in some areas. Also, another article that I found today out of The Guardian is talking about how the US stock market fell because of fears of more interest rate hikes. Right? It shouldn't be a surprise because the Fed's been talking about this for a while now. That's why every time they have a meeting, everyone's listening. What are they going to say? What are they going to do? And they've been talking about more rate hikes. They need to fight inflation. That's what they're saying. So why would this be a surprise? Why the sell-off today and not last week or the week before? Why do we even see this rally when everything that we're seeing today is not a surprise? The CPI, not a surprise. More interest rate hikes, not a surprise. It's crazy. It's wild. And I think people are getting suckered into this market, and I think that's the intention, right? Boom, bear, bust, right? Booms and busts that are created by this monetary monster, and people that don't know how the boom and bust works and how it's manipulated and rigged, I mean, are going to get hurt. So I hope everyone's doing well. Just wanted to give you this update today on the markets. Big red day. We'll see if it continues, right? If it's green tomorrow, we have to ask ourselves why. Is there good news? Is the inflation going to go away tomorrow? Are the rate hikes going to be taken off the table tomorrow? I doubt it. So if we see green days, it's just manipulated, folks. But I continue to see the downtrend in the markets, preparing accordingly, keep stacking. Hope everyone's well. I'll talk to you very, very soon. Bye for now, and peace.